What is up guys, welcome back to the channel. Biden's infrastructure and clean energy plan could be a great push for all energy stocks. The renewable energy companies tend to be newer and smaller with zero dividends and high growth expectations, but the infrastructure stocks tend to be more established and have higher dividends and lower valuations. So with that in mind, today we have 3 more electric utilities companies. These are Dominion Energy, ticker symbol D, DTE Energy, DTE, and Consolidated Edison, ticker ED. In order to make the comparison possible, we will be looking into 8 different factors. Analysts' price targets, forward price to earnings ratio, annual revenue growth, price to sales ratio, return on equity, last 4 quarterly earnings results, current ratio, and dividend yield. The best company under each factor will get a point, so it is possible to have from 0 to 8 points, and in the end the stock with the most points will be considered the winner of this comparison. I hope that the rules were clear, so let's begin. First factor are the analysts' price targets. As investors, we want to check how far the current share price is away from the average target of analysts. If the current price is under the average, we will consider the stock as undervalued, and in the end, the company with share prices furthest away from the average target to the lower side gets a point for this factor. For Dominion, we have 14 price targets of analysts. They range from the lows of $76 to the highs of $89 per share. The average is at $81.43, and the current share price is at $75.72. So there is around 7.5% room for the current price to reach the average target of analysts. For DTE Energy, we have 16 price targets of analysts. They range from the lows of $119 to the highs of $160 per share. The average is at $137.06, and the current share price is at $133.03. So there is around 3% room for the current price to reach the average target of analysts. For Consolidated Edison, we have 15 price targets of analysts. They range from the lows of $65 to the highs of $83.78 per share. The average is at $71.39, and the current share price is at $74.29. So the current share price is around 4% over the average target of analysts. Analysts' price targets are in the table, and with the highest percentage, Dominion Energy gets the first point. Second factor is the forward price to earnings ratio. It is calculated by taking the current share price and dividing it by the estimated future earnings per share. This is the standard price to earnings calculation, with the difference that earnings here are predicted by analysts. So in the end, the stock with the lowest forward price to earnings ratio gets a point for this factor. For Dominion Energy, the forward price to earnings is at 18.38. Forward price to earnings for DTE Energy is at 18.4, and Consolidated Edison has a forward price to earnings of 16.4. Forward price to earnings ratios are in the table, and with the lowest value, Consolidated Edison gets the first point. Third factor is the annual revenue growth. As investors, we want to check if the revenues of a company are on a steady increase. We will take a look into the revenues of the 4 most recent years and compare them one by one. If revenue was on the increase from one year to the next, it will be considered as a +1, and if it was on the decrease, it will be a +0. Then we sum the results up to a minimum of 0 and a maximum of 3, and in the end, the stock with the highest sum gets a point for this factor. Annual revenues for Dominion, and going into 2018 there was a decrease to $11.2 billion US. Then into 2019 we had an increase to 14.4 billion, and into 2020 we had a decrease to 14.1 billion US. So with one increase and 2 decreases in annual revenues, we have a sum of 1. Revenues for DTE Energy, and going into 2018 there was an increase to 14.2 billion US. Then into 2019 we had a decrease to 12.6 billion, and going into 2020 there was another decrease to $12.1 billion. So with one increase and 2 decreases in annual revenues, we have a sum of 1. Revenues for Consolidated Edison, and going into 2018 there was an increase to $12.3 billion US. Then into 2019 there was another increase to 12.5 billion, and going into 2020 there was a decrease to $12.2 billion. So with 2 increases and 1 decrease in annual revenues, we have a sum of 2. Results for the annual revenue growth factor are in the table, and with a sum of 2, Consolidated Edison gets another point. Fourth factor is the price to sales ratio. It is calculated by taking the market cap and dividing it by the trailing 12 months worth of sales. The formula suggests to be looking for a company with a low market cap and with a high result in sales. So in the end, the stock with the lowest price to sales ratio gets a point for this factor. Dominion Energy has a price to sales of 4.31. Price to sales for DTE Energy is at 2.12. and Consolidated Edison has a price to sales of 2.08. Price to sales ratios are in the table, and with the lowest value, Consolidated Edison gets another point. Fifth factor is return on equity. It is calculated by taking the net income and dividing it by the shareholders' equity. A high ROE shows that the company is well managed and that money from investors are efficiently handled. So in the end, a stock with the highest return on equity percentage gets a point for this factor. Dominion has a return on equity of 4.39%. Return on equity for DTE is at 11.23%, and Consolidated Edison has a return on equity of 6.14%. Return on equity percentages are in the table, and with the highest value, DTE Energy gets the first point. Sixth factor is the last 4 quarterly earnings results. When a company reports earnings, they are compared to expectations of analysts. So earnings can either beat expectations, meet them, or miss them. We will consider that beating expectations is a +1, meeting +0.5, and missing 0. Then we sum the results up to a minimum of 0 and a maximum of 4, and in the end, the stock with the highest sum gets a point for this factor. We have quarterly revenues for Dominion, and Q1 of 2020 met expectations, Q2 beat, Q3 beat expectations, and Q4 beat. So with 3 beats and 1 meet in earnings, we have a sum of 3.5. Earnings for DTE, and Q1 of 2020 missed expectations, Q2 beat, Q3 beat expectations, and Q4 beat. So with 3 beats and 1 miss in earnings, we have a sum of 3. Quarterly earnings for Consolidated Edison, and Q1 of 2020 missed expectations, Q2 beat, Q3 missed expectations, and Q4 missed. So with 1 beat and 3 misses in earnings, we have a sum of 1. The results for the last 4 quarterly earnings factor are in the table, and with the highest sum, Dominion Energy gets another point. Seventh factor is the current ratio. It is calculated by taking the current assets and dividing them by the current liabilities. As investors, we want to check if the company is able to cover its debts with assets, but also if they are actually being leveraged. So in the end, the stock with the highest current ratio between 1.5 and 3 gets a point for this factor. For Dominion Energy, the current ratio is at 0.63. Current ratio for DTE is at 1.3. And Consolidated Edison has a current ratio of 0.72. Current ratios are in the table, and with a value really close to 1.5, DTE Energy gets another point. Last factor we are taking into account is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. A high dividend yield may suggest that profits is shared with shareholders, and that is a great passive income source that we as investors are looking for. So in the end, a stock with the highest dividend yield gets a point for this factor. Dominion Energy is paying an annual dividend of $2.52 per share, which is a dividend yield of 3.33%. DTE Energy pays an annual dividend of $4.34 per share, which is a yield of 3.26%, and ED is paying an annual dividend of $3.10 per share, which is a yield of 4.17%. Dividend yields are in the table, and with the highest percentage, Consolidated Edison gets another point. We can calculate the results, so Dominion Energy has 2 points, DTE Energy 2, and Consolidated Edison 4. This means that with a sum of 4, Consolidated Edison is considered the winner of this comparison. And that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. Now there is a question for you: which energy stocks have you been buying recently? Share your picks in a comment below. If you are interested to know exactly when I buy or sell any stock, then consider the options on Patreon. Last week I did comparisons on several oil tanker companies, and we have 32 weeks worth of investing with the Revolut stock portfolio. If you are interested in any of those, then click on a video currently on the screen. And that was it from my side, thank you for watching, and I will be seeing you all in the next one.